What's up, Mortgage Coach community? Dave Savage here, and I am doing an interview with Kyle Rohrbaugh. What's up, Kyle?
How's it going, Dave?
It's going good, buddy. So you are in Gig Harbor, Washington, right?
Yep.
That's a little bit outside of Seattle for those on the East Coast.
A little south of Seattle, sleepy fishing village, but great place to live.
Yeah, no, I've heard it's a great place to live. And then you are a producing branch manager there. How did you do last year?
Last year, best year ever, 86 million in loans, 213 families we helped. So just awesome year for us.
Congratulations. And you manage a branch. What was your total branch production?
Yeah, we're a pretty small branch. So as a branch, we did about 100 million and about 250 loans. So just
Nice.
one other loan officer. And then I brought on my first totally green trainee loan officer this year. So I'm excited to impart some of the great elements of this business to somebody who's got a lot of potential but doesn't know what a DTI is. So it's going to be fun.
I love that. Well, let's keep that story close, and maybe next time I interview you, we'll be including a success story there.
Yep.
And for all you new loan officers, including the person you brought on, make sure you check out the new loan officer playlist in our YouTube channel. We've got a playlist that I put just in order of, if my kid was getting in the mortgage business, like watch these interviews and watch them. I don't know if all of them are in order, but like the first 5 or 6, I was like kind of stacking the deck the way I'd like someone new to watch them. So check it out.
Very cool.
So let's talk about your purpose as a loan officer, because when you and I were doing our prep on this, you've got a pretty clear purpose. So what is your purpose as a mortgage professional?
Yeah, well, it's changed over the years from when you show up and they give you a calculator on your first day and at 10:03, and you think your job is to, give people home loans with a rate and a closing. And I first came to a conference in Denver and heard you in 2005, about 3 years into the business, when you had the old school mortgage coach set up, and just the mortgage planning component for me was a total game changer. I had an accounting degree in college. I loved the notion of being an expert on someone's financial picture, on their helping them identify their goals and take a thoughtful approach to the biggest debt they have ever had. So my started out back then with a real mortgage planning focus, and changed my business to incorporate tools like Mortgage Coach, especially to help people do the best possible loan structure for their short and long-term needs, help them ask some questions that other lenders weren't asking or that they didn't even know to ask. And start paying attention to what the tax implications were, how every decision affected their either equity or their liquidity, either their cash flow or their opportunity costs. And so that's been a core component of my business. And I would summarize all of that by just saying that my job here as a loan officer is 3 things. 1, it's to help people make smart decisions with their home loans, to grow wealth over time. 2, it's to improve the business of my partners, doing that through, helping them with their conversion, helping them with the many things that can be done to improve an individual real estate agent's or CPA's or financial planner's business. And then number 3, and my favorite in the last few years, is just giving people a great place to come to work every day, and helping my team just have a really fulfilling work life, and also helping them in the parts of their life beyond work. And that's probably the thing I'm most proud of in our team and our retention, and just watching these people that come to work here with me every day, watch them grow. So pretty fun.
That is awesome. Well, I can tell right now I'm going to have to do a full 1-hour interview with you. So I hope I can invite you to a Tuesday interview, just because I don't know if I have time to get, hey, your borrower experience and how you help people make smart decisions in a way that's convertible for your realtors. I love that, how you really got 3 pillars, but I'd love to do a full interview and get the whole team piece of it too.
Cool.
So everybody listening to this, I want you to call out the fact that, I mean, this is a pretty evolved value proposition, mission statement for a modern mortgage professional, because it's not just doing loans fast and on time, it's helping people make smarter mortgage decisions and build wealth. That is a progressive, modern originator philosophy. And you notice when he talked about realtors, he talked about, I want to be a conversion partner. More than everything he said was beyond the transaction, so congratulations, you were, clearly a modern mortgage pro, at least as I define it. So walk us through why do you use Mortgage Coach? Why are you on the Mortgage Coach team? Why have you done over 700 total cost analysis? What's your Mortgage Coach why?
So it has been a really helpful tool to clearly and simply help people evaluate different mortgage options that they may not realize exist. There's so many decisions to make within a mortgage. Are you going to do a high cost mortgage or a low cost mortgage? Are you going to do a short-term mortgage or a longer term mortgage? Are you going to do a fixed mortgage or an adjustable mortgage? How are you going to fine tune things in a manner that help you have the greatest likelihood of not only long-term wealth, but really managing your liquidity well in the short-term, tax advantage. And I just find that you've done a nice job developing Mortgage Coach to be user-friendly, to be simple, to put clear, be able to analyze a complicated thing as a mortgage. I always tell borrowers, like, mortgages are the world's hardest thing to shop for. One of the things I feel like I can do is help shoppers become better shoppers by helping them understand the tons of different variables that are happening as they shop for something that's really tough to shop for. The price changes every day. Lenders call fees different things. They have different levels of execution and likelihood of showing up on time as promised to closing. So Mortgage Coach is a tool that helps me helps me teach clients the gravity of the mortgage decision, the variables in the mortgage decision, the different components and options in a mortgage decision that most people, hearing from their coworkers or their family member or reading articles online, aren't going to grasp. And I find that while maybe a couple out of 10 clients don't care about any of that, most people really appreciate that level of consultation, and Mortgage Coach has helped me do that.
Cool. A couple questions came out of that. So it's fair to say you're a mortgage advisor and Mortgage Coach powers your advice. Would that be a fair statement?
Right. If I was just providing them with a commodity, a thing, then I wouldn't need to use Mortgage Coach. But because I'm a professional that's consulting with them to help them do something that's pretty impactful financially in a number of different regards, I use Mortgage Coach so that I can help them analyze and understand the different options.
Okay, love that. So you had mentioned rate shoppers. If anything, I want to help them be a better shopper. Let's talk about how you take a borrower that calls in or comes in and is really rate and price sensitive, how you get them to, broaden it and go, oh, this is a bigger decision. There's more to consider. I don't know if you want to role play it or you just want to describe it conceptually, but if I called you, ring, ring, and, what's your rate? How would you get me off of rate? And maybe you'll just answer the rate, but how would you get me to look at a bigger context? Let's go through that process real quick.
Yeah, so I would say that part of my answer to that question, Dave, has changed over time. I have learned that out of 100 clients, 100 leads, 10 may just not be my client. And so I used to focus so much time and energy on those 10 people who don't care how well you're referred, don't care that you execute closings on time and as promised at a 99.9% level. They don't care that people come back to you for repeat business. They don't care how many, how well your reputation. They just want the cheapest promise up front that any bank or online lender will give them. So I've shifted my focus from worrying about those 10 to really worrying about the other 90, who might still certainly should have some price sensitivity and some concern about rate. But if they're just calling me about rate, they don't want to fill out anything, they don't want to answer any questions, they're just, what's your rate, what's your rate? Like, I literally move on from those as fast as I can, because those people take their wife to anniversary dinner at Denny's because it's cheapest. And I find that, I don't shop around for the cheapest knee surgery. I want a competitively priced knee surgery, but I want the best surgeon and nursing staff and hospital to execute something that's pretty important for me. And I don't want to overpay for that, but I want to, so I would start the whole rate conversation with recognizing that was a big thing for me, because I used to really focus on those couple of just hammering price prospects where it's like you could show them, pricing options and talk them through consultative questions until you're blue in the face, and they're still going to want to know, why some guy online is saying a cheaper price, right?
Right. Yeah. So no doubt. So let's frame it this way. So there's the 10%, and maybe in some markets it's 20, that no matter what you say and how you say it, you're not going to get them, and maybe you don't want them. And then there is like a 20 to 30%, no matter what you say and how you say it, you're going to get them. I mean, they were the way they were referred,
sure.
How, like, you don't even have to do anything. But then that's that other 30%, that how you handle that conversation, how you navigate it, earns trust rapidly, earns respect rapidly, and you get it. So how do you take them from price to advice? Just give me a 1-minute script.
Got it. So if they're open to it, what I will say is, hey, Dave, I'm so glad that you are working with Jim. He's a great agent who has, I watched him take great care of clients for a long time. I know you're friends. He and I are great friends and partners, so it's important to me that you get really well taken care of. One of the things that Jim knows is that there are a lot of financial implications to your mortgage, and so one of the things I will help you do is come alongside you and help you figure out what the optimal way to structure this thing is. Can I ask you a few questions about what your goals are so that we can put some analysis together that will help you make great decisions? Is that okay?
Boom. So guys, there was so much, just perfection going on. He triangulated for trust. So he was, taking the trust of that realtor that referred him and referencing him. He mentioned the word analysis. They're not going to just get a quote or a pre-approval. The same thing every other loan officer is. They're going to get an analysis. And I just need to ask you some quick questions. And if they would have said rate, he could say, and then I'll tell you exactly what your rate options are. He really, it was a great script. So is there anything else you want to add to that before we kind of move down the process? And I want to kind of like unpack how you take someone from referral to a mortgage coach experience. Anything else you want to say there?
I would just, if you mentioned it, but if they do really want to push on rate, I'll point out, I mean, a lot of these conversations happen before contract, so that anyone giving them a rate promise is not locking them in at the same time. And I will remind them that, hey, I'll phrase it this way. One of the things that will have to be true for you and I to work together is that you're going to have to really think that you're getting a great rate from me. That's something that we will discuss in detail when you're under contract to buy a house, and I can lock that rate in advance of you finding a house. Any rate that I give you is just a guess based on where the market will stay. So let me ask you some key questions, and we will come back to the rate conversation when it's ready. I can give you an idea of how awesome the market is right now, what the range looks like, but let's kind of that conversation, so that I'm not completely sidestepping the rate conversation or the lock conversation. I'm just moving it till after we really build some trust in the analysis phase.
Makes sense. So let's go into that. Okay, now you've got them. They said yes. You've asked them some questions. When does the total cost analysis come in? Have they already filled out an app? You know, where do you do the TCA within your sales process?
Right. So I like to, I meet with a lot of clients in person. I find that just their apprehension about even buying a house or refinancing goes down tremendously when we can meet in person. I know that's not a reality for every consumer or every market, but the more we can either do a face-to-face or a Zoom interview, and we can start finding out. And sometimes there's things on the radar that they didn't even think to mention, but are a big deal. They might have a big business opportunity coming up, or there's a change in income on the horizon, or this house is going to need to be remodeled in a few years because they plan to grow their family. So I really try and transition into an information gathering, consultative approach, and not be arrogant enough to assume that I know the way their loan needs to be structured from the absolute beginning. So there's, really an openness to learning about them. And maybe what we'll learn is that, gosh, you're going to sell this thing in 2 years. Let's keep your current loan and not do anything. I'll be here to help you in 2 years, but let's just enjoy the rate you're at and continue to pay down on your principal and leave it there, And I think that really disarms people and builds trust when you're not just trying to sell a deal. You're trying to help them diagnose what really is going on, what things are they need to be thinking about. And anytime you have a sales professional that tells you not to do something, or at least asks you a bunch of important questions before prescribing what you ought to do, that's helpful for the client. It's helpful for me. It builds great trust. And so I'd say the numbers for the TCA, the analysis through Mortgage Coach, go a lot better if I've invested some time up front to ask some of those questions. And then if it's a refi, we're ready to do a TCA. I love doing them in person, or I love doing them over a live phone call with it in front of them. I'll sometimes do a Zoom interview or a Zoom consultation. And if not, I can just email it to them and maybe add a video.
Love it. And again, you're doing so many things that are just right. And you've just clearly, I think of all the tools that a modern mortgage pro has, they're like golf clubs in a golf bag. And you mentioned Zoom, when to use Zoom. You mentioned Mortgage Coach Live and Mortgage Coach Video, when to use that club to connect, to give more connection to the family and to give better advice to the family. So let's just let's start with someone who didn't, well, first of all, what percent come into your house? Or come into your office? What percentage? Is it over 50?
Oh yeah. Maybe 65, I think.
Okay, so let's start with that. So before they come into their office or your office, have they filled out your online app? Have you sent them a digital link and had them fill that out?
Always, yeah. That's one of the first things we do. Hey, Mr. and Mrs. Buyer, one of the things that we want to do is have our appointment at the highest level possible. And so I'm going to send you a link for most of our clients. This is a really easy and convenient way to share the information that's relevant so that when you come in, we can make great use of your time. And I'll have some options prepared so that we can make a lot of progress in a short meeting. And 9 out of 10 people are down with that. If I'm meeting them for the first time, I've got nothing from them, and they come in, that's really tough. And so I can have a mortgage, I can have their credit pulled, their 1003, hopefully most of their documentation, so that we can make our appointment pretty relational, pretty high level. I don't have to fill out 1003 boxes. I don't have to sit there and pull credit. I don't have to build the TCA. I already have it built, so that we can make a really efficient use of 30 to 40 minutes.
Okay, so they got the link, 9 out of 10 fill it out. By the way, who creates the TCA? Is it you or one of your teammates that actually did the setup?
Either me or a front end, pretty high level front end transaction, a front end assistant who's licensed, who's good. It used to be just me that did it. Yeah.
Yeah. So LP2, loan production partner. Either one of you has done the setup.
Yep.
They come in, and is it very different if they don't? Because, you know, if you've got 65 coming in, you've got 35% not coming in. Is it still pretty much the same thing? Like you had a conversation, you drove the link, and now you're gonna schedule a virtual
Yeah,
meeting?
process is the same. The only difference being that the folks that can get in here, we try and get them here. If they're relocating from across country, we'll do the same thing over Zoom or a conference call. But yeah, we want the same info up front.
So one thing I want everybody to start connecting the dots. Every time I talk to loan officers now, a vast majority of their clients are filling out the app, digital experience. And guys, think about when you give them back the reward for that. Like, are you going to give them a fee worksheet that's a PDF, or are you going to give them digital borrower education? So it's, you know, the consumer behavior has changed, that consumers want a total cost analysis. They do not want a printed fee worksheet or something that they can't read on their mobile device or something that's not educational. They want, they'll apply to do business with you through a platform, and they want to get advice through a platform. Are you finding that more and more true, that Mortgage Coach and the TCA just really fit nicely into the overall borrower experience?
Right. And the other thing that happens is that the more you require them up front, a few things happen. One, they sort of go from having their toe in the home buying or refinance process to getting their foot into it, to wading up to their, you know, knees and their hips. And they come into your office almost more willing to listen to you, more willing to take advice. They have invented more questions in their head just by filling out your info. And so it helps if they just came in and all of a sudden I put a TCA in front of them. I don't feel like they would maybe be as open or have as much questions in their own head. And so engaging in the process kind of invites them into it, and we feel like we get a higher level of interaction. The other thing that happens is that I create a standard for my business. I've raised the bar, and I used to not do this, and I learned this a lot of years ago, like raise the bar for your business, and most people will be happy to jump over it. And the ones that don't are not going to be the best clients. So if they push back, I'm not filling that out. I don't want to do that. No, I don't want to meet in person because, you know, I just want to quote. Like, that's a good indicator that they want to do business their way and not my way. And if they're open to doing it my way, it can be a great experience for them. It can be a high value meeting. They're going to be open to the TCA analysis. So that's just something I've found too. When you kind of establish a higher bar, then the people that clear it are great clients, and the ones that fight against you, probably, you know, better to move on from because they want to do it their way, right?
No doubt about it. And just think about it from a consumer standpoint. They've given a lot of information. You've talked. So now that TCA, that total cost analysis, it's highly personalized. So the more personal data that's verified, now it makes that deliverable even more valuable.
Mm-hmm.
So let's pull it up. Let's pull one up on your screen and just, you know, let's just go for another like 3 to 4 minutes. But I want to make sure we cap it off with, you guys got the front end of the process. You got the overall sales strategy. I am going to be interviewing Kyle again. So if you have a question for my next interview with Kyle, put it down below. And what, by the way, what do you call it? Do you call it a total cost analysis, or do you have a name and how you refer to it? I want to get your scripting, how you position this with the family, whether it's in person or over the phone. What do you call this?
So when I try and reinvent any wheel, it doesn't go very well. So I just call it a total cost analysis. I'll say in the email, I'll do Savage total cost analysis, and I'll link that whole thing to their TCA and send it to them that way.
So it's a Savage total cost analysis. I like that. Mm-hmm. Everybody gets the Savage total. I'm kidding.
Yeah.
For anybody that thought he gives everybody the Savage total cost analysis, it sounds like you're putting in the last name.
Yep.
And I love that. Anytime you can put the family's name in, and I'm hearing even people say, like, you know, the name of a person and personal, you know, mortgage website options, you know, because this really does become their mortgage advice link.
Yep.
Even if they buy more homes, you can update the same link. So,
yep.
So tell us about the story and strategy around what we're looking at right now.
So, I mean, it gets pretty fun to do TCAs when your rates drop by the crazy amounts we've seen. So this was one from last week, and this guy's sitting at 4.25 and reconnected with them from a loan a year or two ago, and just had the ability to put together. He didn't want to see different amortizations, which I like to do that a lot. I love, people amortizing their debt, being forced to, invest in their principal reduction. But this was just a straight 30-year at different rates with different costs, so that he can see, gosh, this, lower rate that the servicer is telling me saves me a little bit of money, but not necessarily over 5 years. So I put together options for him to potentially consider a lower cost loan. He was, not sure that he's going to be in the home past 7-8 years. And so it was kind of interesting for him to see that the delta on the 3625, even though he's paying, $33, $32 a month more, $42 a month more, because the cost on the 3625 goes so much lower, you actually break even after 5 years, and you get to protect and conserve more of your equity. And it was just something he hadn't really thought of, because people get so focused on rate, but in the context of, overall cost, they're not really sure what to look at. And so this helped me show him, yeah, your payment's going to be slightly higher, but it's still way lower than you're paying now. And you'll break even after 5 years, which is about when you're going to start thinking about selling. And if we were going to have you in this home for 30 years, we might show the analysis a little differently. But
I love it. I love it. So guys, make note that he's getting them focused on cost over time. And that's where you start making every other loan officer look like the villain. They're hiding things. They're not showing the 5 years. Also, he could have taken it and taken like the $222 and applied it to the principal and said, hey, what if we, you save the money and then you applied it to your principal? Do you ever do that where you show them how to pay off their home faster and save interest costs?
yeah, I love that. I love showing those big numbers of interest savings on the back end of a loan. I also like, calculating their P&I payment. In your current route, you got 28 years left. But if you apply this interest savings to the payment you were paying, you're going to have, 22 years left. So that means 6 years of no mortgage payments that you will invest in your future self, and put a dollar amount on that savings. It's pretty crazy. So
yeah, no, that's awesome. Now, let's close out with a purchase options. And while you're pulling that up, do your realtors like Mortgage Coach? Have you socialized it with them, and do they see it as you mentioned, I want to be their conversion partner. Have you walked them through and really shown them how you help them?
yeah, I like to copy the agent a lot, or forward the agent. I don't always involve the agent with the client to weigh in on the decision. However, I've done that with financial advisors a lot. But I do like to circle back with the agent just to remind them why we're doing what we're doing, and why we're, what we're recommending, so that one of my goals is just that the client would come away from the consult like, whoa, I was not expecting that. And the best thing you can do for yourself is have your client say great things about you to the agent, and not just at the end, like you hope they will if you do the right thing, but right after the first appointment. And so bringing this TCA language in and showing the agent what we're doing has been a helpful tool for me for a long time. And my agents know next time they refer somebody, they're going to get the same thing.
Yeah, we'll pull up that. One other suggestion, guys. I was at a site visit with Jeremy Forcier a week ago, and he gives every family a total cost analysis, and he had I think 4 loans that he got 8 leads, and he had 4 loans that came from clients while they were in process. So his current pipeline, he's got a very systematic way that when a family says, oh, Jeremy, thanks for something, he sends them an email and he asks for 2 referrals. And every single active client, he does that. And so another reason to give the TCA is you want to get that wow to win the deal. You want to get that wow to reduce rate shopping. You want to get the wow just because it's valuable for the consumer, but it's also going to help you get more referrals during the process of the loan if you're doing more than a transaction. You're giving advice and you're giving tangible value.
Yeah.
Kyle, I'll let you know when I can see it.
Yeah, this one, Dave, the ones I pulled were just the last several I've done, and they've been mostly refinance. So I'll just show you a different one that's a little simpler. This was for a client who has been in a pretty high interest rate 30-year, and that he was interested more in just different amortizations. And so pretty shocked at the amount of money he could save over 60 months if he had just invested a few $100 more a month and switched from a 30 to a 15. And even with some payment savings on a 20-year, he saves himself like almost, $8,500. And the long-term difference over 15 years is like unbelievable. It's criminal for his current lender to take this much money from him when rates are so much less. I always love when, people get a competing quote from their servicer and they've been paying, 4.5 for 3 years. It's like, oh, that's nice that they're coming to you now that they saw your credit got pulled to offer you a lower deal. Where were they, before to help you out and save money, But anyway, like this is a good difference in amortization. I just think these numbers like pop off the page for people when they realize what a refinance strategically put together for a shorter loan term will do for their family over time. So
love it. Well, let's quit sharing. Let's wrap this up. And guys, think about this. If every family you served got a total cost analysis, you would be more successful. Your client would be more successful. Because there is a lot of refis going on right now. So, I mean, it's still a really strong purchase market, but I'm hearing a lot of mortgage coach loan officers love giving the TCA for refis because they can work after hours. They can get it to the family and sometimes not even have to talk to someone and just get a text back or an email back, or even, create a TCA and put a video on it. Are you doing that right now in today's low rate market?
Yeah, I mean, we try and we got to do a lot of them. I just try to make the analysis really simple. Current loan, almost not, I don't want to overwhelm them with too many options. Sometimes it's just a clear and decisive piece of advice. If I'm in your shoes with what your goals are, how long you want to remain in that house, what's more important, being debt free sooner or having lower payment flexibility. I kind of know those things before I build it. And I just say, if I'm you, I'd do this rate at 0 points. You're going to save $300 a month. Here's the analysis. You'll save, $7,000 over the next 5 years, and you'll save $62,000 over the next 15. Let me know if you want to lock it in. And,
boom.
It's just simple, clear. It's a lot of leadership, and my feelings won't be hurt if they don't want to, but I'm giving them some value and helping them make a decision.
All right, so let's wrap this up, guys. If you got any value from this, give us a like down below, whether you're watching this on YouTube, whether you're watching this on Facebook. If you have any comments for my next interview with Kyle, let me know. And Kyle, one last question, 1 minute or less, just real quick. You're a leader, you're a manager, you're a mortgage coach. What advice do you have to the mortgage coach community in closing?
I just think this is such an awesome time to be in this business. Those of us who kind of white knuckled it from 2009 to 2012, 13, it's like everyone you talk to now, they feel good about their jobs. They have equity in their homes. They're trying to figure out this market. They're looking to you for advice. The big banks are still not awesome at closing loans. There's still a lot of internet sharks out there. There's still a lot of loan officers that don't have the competence or the integrity to do the right thing for the client. And it's as important as ever, especially with some of this internet lending pressure come in. Be proud of what you do. Be proud of the value you can provide to someone's family, the way you can protect them, the way that you can help them win an offer on a house in a multiple offer situation, the amount of effort and investment you can make in them. You can just care more. I mean, it's a great time to be a serious mortgage professional because especially as it gets busy with a lot of refinances, banks and lenders that are not awesome at closing loans or caring for their clients are going to fumble the ball, and we're going to pick it up and take great care of people. So just be really proud of the job you have and be unapologetic about your value proposition to your clients and your partners to take great care of people. So
that was awesome, brother. Thank you so much. This call is a wrap. Take care, guys. See you next time.
all right, thanks.